Welcome to Sales Tax and More, your go-to resource for all things state tax related. Now here's your host, Michael Fleming.
Hi, Mike Fleming here, founder of Sales Tax and More, and today's co-host of the Sales Tax and More podcast, where we talk about everybody's favorite topic, which is, of course, sales tax. And today we're going to talk about if states tax digital products. But before we get into it, let me introduce you to my co-host, Ellie Moffitt.
Hey everyone, great to be here. And I'll do a quick introduction for Sales Tax and More. As always, we are a full service consulting and solutions firm. So we do a lot of sales tax returns, sales tax registrations, consultations, research, and like our name states, more. So if you have questions about our services, if you'd like to work with us, please reach out, let us know. We'd love to hear from you, and we would love to work with you as well. So Mike, that all being said, why don't we jump right in? So, do states tax digital products?
Well, Ellie, as always, my answer is it depends. And in this instance, it's going to depend, number one, on the state in question, but more importantly, what's a digital product? Some states have specific definitions of what a digital product is. Other states do not. Downloaded software, common sense may tell us it's a digital product, but some states by statute define it as tangible personal property. So what do you mean by digital products?
Okay, what about downloaded pictures, videos, books, things that people are downloading from the internet?
Okay. Again, it's going to depend on the state. In a state like California, they're not going to tax any of these types of items. These are items that, California only taxes tangible personal property, so none of these items would be taxable there. As opposed to a state like Washington that pretty much taxes everything, and they would all be taxable there. So some states are going to say, if the tangible version is taxable, then the digital version is also taxable, and vice versa. If the tangible version is not taxable, then the digital version is not going to be taxable. Other states, like we were talking about before, are going to define what a digital product is. In those, one of the categories that we're seeing more and more states tax are what's called a digital audio visual work, video or a movie, in other words. So digital audio visual works. And they started taxing this in order to go after companies like Netflix, who was broadcasting digital audio visual works. However, as is often the case, when the state throws a wide net, they end up catching a lot of other activities that may or may not have been their intent. For example, many people who have live webinars often have pre-recorded webinars. And now the live webinars are generally not going to be taxable, but in quite a number of states that tax digital audio visual works, then a webinar could actually become taxable if you're paying to access it.
So why are people getting this wrong? What's the misconception that's happening?
Oh, let's take a step back. So the answer is it's going to be greatly different from state to state. And rather than spend hours and hours on this podcast here going through, a picture, a video, a book, because it could be different from state to state, what I suggest is reaching out to us offline and we can go through these types of issues. But some states are going to tax pretty much all digital products, some states just one or two things, and some states none at all. Why do people get it wrong? It's not just digital products, but when we think of how our own state taxes something, we apply that across all of the states. Well, if my state taxes it, all states should tax it. Or if my state doesn't tax it, well, no states will tax it. That's the biggest reason I see people getting not just digital products wrong, but the taxability of a lot of different things wrong. We can't project what our state does because each state is different and all the states have their own ideas of what should and should not be taxable. So that's number one. Number two is people often maybe they get the taxability right, but where's the sales sourced? I mean, when we're talking about tangible personal property, something we can see, touch, feel, smell, where we're shipping that item is generally going to determine where the sale is sourced. But we're not shipping anything when it comes to digital properties. So that's very confusing. People get it wrong. Most states have a hierarchy of knowledge. What did you know at the point of sale? What type of information? Did they tell you where it was going to be getting downloaded? Did they download it at your location? A lot of times this defaults to the information gathered during the transaction itself. I mean, a lot of these digital items are purchased online and you've got to enter your credit card information. So the billing address is often the information known at the point of sale, and that's where it's going to be sourced. So lots of different reasons why people get this wrong. All of them very valid. And did I get that question for you?
I think so. I think so. Is there anything, I mean, it kind of sounds like you're heading here anywhere, but anyway, but anything else you want to add in about this topic as a whole?
Yeah, absolutely. This is something that's rapidly advancing technology, and states are struggling to keep up. Sometimes I use Michigan as an example. This is a number of years back. In a 9-month period, they said downloaded software, which in most instances is not going to be considered a digital product. And state of Washington, it could be, but in most states, it's going to be treated differently. And they said it was going to be, it started out as non-taxable, then they said it was going to be taxable, then the court slapped them and they said it was going to be non-taxable. So 3 different ways to look at it within a 9-month period, basically. So states are trying to play catch up. How do they get their arms around this? How do they tax it? Should they tax it? And it's constantly evolving, constantly changing.
So, Mike, I guess my last question here is technology is really advancing rapidly. We all know that. There's always changes. Things are always changing. Is any of what we've talked about really set in stone?
Like we alluded to in my previous answer, I don't think so. Look at Michigan. We had 3 changes in approximately 9 months. So this is always changing. Of all the areas of sales tax, digital products is one of those areas that's changing the most. We're starting to see trends. So the digital audio visual works is a big one. More and more states taxing more of that every year. More and more states taxing other digital products. Digital audio books, are also being taxed in more and more states every year. So it's not set in stone. Just because it was not taxable last year does not mean it's not taxable this year, or even just because it was not taxable yesterday does not mean it is not taxable today or taxable today.
Thank you so much, Mike. And I'll just kind of wrap this up by saying, if you have sales tax needs, we offer many solutions and services. You can reach out to me directly if you have questions. My email is emoffat, that's EMOFFAT, @salestaxandmore.com. You can also visit our website, salestaxandmore.com. And in addition to the services we offer, we have an entire free series of webinars and resources on our website. And I forgot to say already, but if you've enjoyed listening with us, if you like this podcast, please like and subscribe. It helps us out substantially. Thank you so much for joining us.
Thank you, everyone, and do hope to see you on the next episode of the Sales Tax and More podcast. Bye-bye.
Thanks for listening. Be sure to hit subscribe and check out all the resources we have out on the web.